30 years ago, the Perpetual Trust of St. Peter and St. Paul was established with 89 million in proceeds from the sale of St. Mark's Hospital. It was designed to support the diocese by providing a secure and stable source of funds to finance diocesan and parish operations and programs. From 1989 to 1994, the investments of the trust were limited to bonds and other fixed income securities, and only the interest income could be paid out. But the trustees determined that the investment portfolio needed to be diversified to generate higher returns, and we adopted a policy asset allocation to achieve that goal that is still in place to this day. Based on historical analysis, we determined that the maximum amount that could be paid out to the diocese each year was 5% of a 48-month rolling average market value. When this was established, it seemed sound and prudent because the long-term returns on investment portfolios was about 9%. But today we're facing returns of 5 to 6%. We've talked about this with our financial advisors, other endowment funds, and we learned that we are way out of line with our peers. They're limiting distributions to 3 to 4% or even less. Now, the trust can't reduce the 5% distribution rate without the approval of the diocesan convention and the court. So in response to these concerns, the diocese has reduced the amount that it takes in operating distributions for the last 3 years and is expected to do so this year. For 2021, the maximum operating distribution has been calculated at about $3,175,000. This is about $180,000 less than in 2020. In 1998, the trust borrowed money under Project Jubilee to finance the capital construction, repair, and improvement needs of the diocese. This debt is secured solely by the securities held by the trust. No assets of the diocese or any parish are used as security for the Project Jubilee loans. Borrowing for Project Jubilee reached its peak in 2011 at $34.5 million. Since then, the trust has paid down $12 million, bringing the outstanding balance to $22.5 million. The trustees intend to continue to make periodic repayments of principal whenever market conditions permit. However, given the market this year, we do not believe that any principal payment can be made in 2020. As of midday, September 15th, the trust held approximately $68.2 million in assets. After a sharp decline in March, the market value of the trust has gradually increased, but is still about $2 million less than in December 2019. During this same period, the trust has paid out over $2 million in operating distribution and loan interest. From inception to the end of August this year, the trust will have paid out $176.3 million for the benefit of the diocese. Despite this cash drain, the trust has generated investment returns comparable to benchmark returns on similar portfolios. Year to date, as of August 31st, the trust had lost 1.1%. But for the 12 months ended August 31st, it had earned 6.56%. For July and August, there was a 6.85% return. But September has seen the markets be highly volatile and also in negative territory, so we may not see much of an improvement in the third quarter. As those of you who were at convention last year will recall, we discussed the trust's commitment to what is called impact or sustainability investment in environmental, social, and governance investment securities. At that time, we had about $2.2 million in targeted what's called ESG investments. This August, we made a major move, and as of today, we have 7.7 million, or 11.4% of the portfolio in social investment funds. In addition, 80% of the balance of the portfolio that are not targeted ESG funds have ESG ratings of average or above. So we feel we have made great progress and will continue to monitor the portfolio and available market securities to increase and maintain our commitment to ESG investment. Scott?